Tesla stock is going to $315, says Dan Ives. He reiterated his buy rating. Let's take a look.
Well, the biggest issue is that those conference calls, they've almost been Saturday Night Live comedy shows. I mean, because without a CFO, Zach, since he left in August, every time you want to get guidance, you want communication, you don't get it. So the problem now is that I think about 80% of the sell-off has been communication, 20% is the actual fundamentals. And investors in this market, you'll see risk off on Tesla, but I don't believe we sit here 6-12 months from now, it's the same narrative. As we ultimately see a sub $30,000 vehicle, FSD autonomous, and the rest, ultimately what I view as the story, comes to fruit.
12 months.
12, look, I think we are definitely right now going through a very, very difficult period as a Tesla holder. I mean, it's so much easier to just own the godfather of AI, Jensen, NVIDIA, Microsoft, you know, what I view Amazon, a handful of others. But for Tesla, I think we get onto the other side of this. That said, it's definitely, you know, sort of put the seatbelt on time as we see in terms of the stock. We've been here before in terms of going through, in terms of going through these types of situations, you ultimately have to, betting against been the wrong move.
A little bit over a year ago, people were telling me it's over for Tesla stock. What are you even doing buying this stock? And I just kept on smiling and buying more Tesla stock. The Tesla stock buying opportunity has been getting bigger, and so have ARK Invest's Tesla stock purchases. Cathie Wood is buying more Tesla stock. This time she bought $11.3 million worth of Tesla stock. And the day before that, she bought $15 million worth of Tesla stock. It is pretty safe to say that we can count on Cathie Wood to buy a lot more Tesla stock if the stock keeps dropping. We have new regulations that have been approved in Europe, so FSD is likely coming to Europe in 2025. Tesla Scope can also confirm this. We have also been told there's a chance full self-driving beta may be preliminary released this October in some regions of the European Union. Tesla will also finally be transitioning from hardware 3 to hardware 4 later this year at Giga Berlin due to the regulations being adopted. Until now, people that purchased FSD beta, they couldn't use it at all. But that will no longer be the case going forward. The regulations, though, will require Tesla to alarm the driver if it detects that the driver is not paying attention for 5 seconds straight. So these FSD rumors from earlier are turning into reality now. Tesla quits Australian Federal Chamber of Automotive Industries over claims group deceived customers on CO2 scheme. If consumers believe that the FCAI truly speaks for car companies when claiming that more polluting vehicles will increase by as much as $13,000 next year, they may rush to purchase the most inefficient vehicles in anticipation of soaring resale values. So basically, Tesla is saying that the car lobby is deceiving the customers. Who could have foreseen that coming? A lobby that is not being open and honest and truthful about its intentions. But that's happening in Australia, so it would never happen ever in the US, right? Tesla battery supplier Panasonic Energy is weighing additional investment in Kansas. The plan includes building additional production lines. The main customer for the additional batteries would likely be its key client, Tesla, of course. So that would be good news because Tesla needs more batteries made in the US to get the $7,500 tax credits. We have a Giga Berlin update after the attack on the factory. It's good that the local officials have condemned these extremists' actions. The power was not only cut to the Gigafactory, but also to nearby villages and towns, which included critical infrastructure like hospitals, police stations. So lives were actually put at risk because of this. In the letter, which has been deemed credible by law enforcement, the group calls for the total destruction of the Gigafactory. These people believe that Tesla is usurping the resources, people, and labor of the earth to produce its cars. All of the people that work for Giga Berlin work there voluntarily. What are you even talking about? These people have lost their minds. Giga Berlin evacuated all of its workers to ensure their safety. The damage caused to Tesla is already about $1 billion and continues to grow with each day of a shutdown. Now, Drive Tesla was told that production will not continue sooner than March 11th. From the sounds of it, though, I think it's going to take a bit longer. The rule of law will react harshly, though, is what we are hearing from the government, so I really like that. We definitely don't want any of these things to happen again, so it's good that there's going to be extremely harsh punishment. I think Rohan Patel is now Tesla's PR department. Basically, he commented in detail about the Giga Berlin situation. He explains that Giga Berlin's per vehicle production only takes 2.28 cubic meters of water, which is 33% less than the industry average, and that Giga Berlin recycles up to 100% of the industrial water, and the local residents are still concerned with water. And for those concerned with trees being cut down, afforestation for Giga Berlin's current site is even faster than construction. It's great to see posts like this from Tesla, and this actually got 1 million views. So I think it's making some difference. Tesla also commented on this story directly, and it said that its plant in Germany was expected to have no electricity until March 17th, which would be Sunday, not this Sunday, but the next Sunday. We got some new details about the refresh Model 3 performance, which will or should be called ludicrous. Jay Leno said that with a triple engine in it, it would be a killer, but a Tesla executive responded by saying that it would be fun, but it would be hard to fit that in. So I'm getting from all of this that it is going to have 2 motors only and not 3. The launch date is probably going to be May, and it will be launched at the same time in the US and China. There are a few more rumors going around from a leak from South Korea. The weight should be the same as the previous Model 3 performance, and the motors will reach peak power at 110 kilometers an hour, or about 70 miles an hour, compared to previously about 45 miles an hour. My Model 3 seems to have a lot of power when you're driving it in the city, but the moment you go on the highway, if you want to accelerate really fast, you can still do it, but it's just not the same. It feels like it has less power at these higher speeds, so this is going to change with this new refresh. Tesla China is posting more job openings to increase its delivery team and staff in several fields. Gary Black and Ross Gerber sold Tesla stock. Gary Black now has Tesla stock at number 15 in his fund, and Ross Gerber has Tesla stock as his number 14 position. Keep in mind though that Gary Black has before sold Tesla stock completely, so it's not the first time that he has sold Tesla stock in a major way. And my understanding is that he owns about 2,000 shares of Tesla in his ETF, but in managed accounts, he has a lot more than that. Before he commented on 2024 deliveries, he says 2.1 million is not possible in his opinion, and that 2 million is possible, but less than 50% likely. Gary Black posted an update to his valuation model. He predicts that Tesla will deliver 2 million vehicles this year. Wall Street is at 2,088,000. He expects 2024 and 2025 earnings estimates to be reduced in the coming weeks as others come to the conclusion their Q1 and 2024 volume estimates are too high. His 2030 earnings estimate is at $18 versus Wall Street at $13. His 2030 delivery estimate is 8.8 million versus Wall Street at 5.36 million. Gary also dropped EV adoption estimate from 60% to 50%. And in 2030, Gary expects Tesla stock to be at $540. And discounting that at 13.6% gives him a $250 12-month price target. Here's Gary's more detailed model. In the worst case, for Tesla stock to outperform the market, it just needs to really beat Wall Street's expectations, which are at 5.36 million deliveries in 2030. That seems like such a low goal. And almost no analysts attribute any significant value to Tesla's FSD, which is where a lot of the future cash flows are. Then there's Tesla's energy business, Dojo, Optimus, and some smaller businesses which will take more time to show up in Tesla's financials, like supercharging, and insurance. However, Tesla being a very volatile stock and not doing anything after a big run for many years is typical and to some degree expected. The buying opportunity could get quite a bit bigger, and if it does, I will be buying more Tesla stock. Tesla is a very volatile stock, and sometimes the sentiment can change so quickly, and then the hype overtakes everyone and the stock just rallies. Check this out. Local and Tesla insurance subsidies in this city in China have caused a surge in demand of the Model 3 and Y sales. I'm not saying this is about to turn around the stock, but sometimes when there's good news for Tesla stock, it just comes in an avalanche and it just doesn't stop for a while. And when there's bad news, supposedly these bad news stories just don't stop, but eventually they do. But in the meantime, a lot of the traders or people that are investing in Tesla stock without a long-term plan, a lot of these people just get flushed out of the stock. And the worst part is, I sometimes feel a little bit sorry for them, when they sell at the very bottom and then immediately after that the stock rallies. Elon replied to Farzad here, my biggest concern with the OpenAI saga is that it's painfully clear AGI will be developed and controlled by a handful of people. I don't know how to feel about this. So Elon responds, governments will attempt to seize power over AGI, which may be worse, but it is increasingly coming down to a choice of what company do you trust most to develop AGI. Farzad responds with, I think government having control of AGI is probably the worst outcome, although governments have had control of nukes for a long time and we seem okay. But you cannot use a nuclear weapon on your own population, and if you use it, everyone will see it. It's going to be extremely obvious and it's going to be very messy, but you can use AI and no one may find out for a long time, and you can use it with extreme precision. So I think this one is a bit different. It's actually quite a bit different. Companies being in control of AGI raises the question of long-term governance as well. What happens when you are no longer around, or when Microsoft and Google get a hold of AGI and they become ultra profit motivated? In my opinion, democratizing the power of AI so that everyone has equal access to its benefits is by far the most important thing. I agree with that. If we look at the countries that we have today, and if you look at their history, you will often find times in history of these countries where someone comes in and just takes over the country, or the government does so from the inside. But that hasn't really happened with the US. And one reason why, I think at least partially, is because when your citizens have weapons and when they can fight against the government, it's a bit more difficult to get everyone in line to follow exactly what you want them to do against their will. So everyone having access to AGI would be like everyone having access to guns. There are certainly downsides to it, but there are upsides. Everyone having access to AGI, certainly there's going to be some sort of equivalent of a school shooting. James just did a really detailed update on Tesla stock. I was asked in my subscriber space that I accidentally made public what my opinion was on FSD. I will summarize. When I started investing in Tesla stock in fall 2019, FSD was not included in my Tesla stock bull thesis. In fact, it has never been included. I invested for the EV and energy businesses, but that doesn't mean I haven't kept a close eye on FSD's development and progress, because obviously the upside is huge. Tesla in 2024 and Tesla in 2019 are different companies, mostly because the strategic direction and focus has changed. The stretch goal used to be 20 million EVs in 2030. Now the stretch goal is robots and robotaxis. I believe as a conservative investor that the probability of Tesla achieving their objectives in this new reality is much, much lower than what I believed in 2019 when their goal was to get to 20 million EVs. Not impossible, James says, just lower. Therefore, risk is higher. I do think, however, that it makes sense that Elon has steered the company's R&D towards AI because the investment required is relatively small and the potential upside is almost infinity. So it is a lopsided bet that Tesla must make. I don't quite agree with that assessment. Back in 2019, the total potential return was, I think, looking back then and looking at the potential future, if you include FSD and all of these other things, I think the potential return was higher in the long term. But the risk was still there. I think the risk today that Tesla would go bankrupt is zero, pretty much. At this point, it's beyond obvious that in the long term, EVs will take over. And seeing FSD 12, I think, is a bit similar to seeing in 2019 that Tesla is working on its EVs, and clearly it is the future, and that eventually this is going to turn into a massive profit center. Back in 2019, my thinking was that Tesla does not need to get to 20 million deliveries by 2030 for the stock to do incredibly well. And with FSD, while it would be amazing that FSD would be completely solved, but even if it's not fully solved quickly, with FSD 11, it's obvious that it is going to be incredibly useful to anyone that drives a vehicle. We can now see that the car is able to navigate parking lots and actually park itself. And perhaps most importantly for everyday use, it is incredibly smooth. And if it can work smoothly in every place in the world, it will help Tesla sell more Teslas. Now, I personally think that FSD will be solved, but I'm talking about a bad case scenario here, and I generally like to look at the worst case or really bad scenarios first, and as long as it still makes sense for me to own the stock, even in a bad case scenario, then I am going to be an investor. Keep in mind that my second favorite investment when it comes to stocks is S&P 500. So in many ways, I am very conservative because I wouldn't be buying Nvidia or Rivian stock or Microsoft or one of these tech stocks. If I bought any of these other stocks, it would be a tiny amount in my stock portfolio. James continues, where I run into difficulty as an investor is when I look at my original investment thesis. Tesla is not going to be anywhere near 20 million in 2030. I think that much is now clear to anyone, but more than that, I would be okay with bot and AI being the stretch goal if it meant that the core business was healthy. Energy had a great 2023, and I expect an even better 2024. But the auto business, which makes up the lion's share of Tesla's earnings, is struggling to grow and will probably keep struggling until Tesla launches new vehicles. And let's be honest, 2026 is probably a stretch too. When is Tesla ever early? It only happened with the Model Y, and that's because it's very close to Model 3. Look at the challenges on every single other vehicle Tesla ever produced or refreshed, except the Model 3 that was refreshed in China. That was so smooth. But other than that, yeah, we did have quite a few delays. And despite that, the Model Y and Model 3 became extremely popular vehicles. Despite the issues in the beginning with the Roadster and the Model S and the Model X, that did not stop Tesla from eventually developing an extremely successful Model 3 and Model Y. And so issues that Tesla is facing right now, these issues are not going to stop Tesla from developing FSD. Things sort of went off the rails for me when Elon started treating the vehicle business as a cash cow, not to mention the mismanagement of Tesla's pricing strategy and new vehicle development strategy. I think both of these things are connected. Why are they connected? Because if FSD is around the corner, both of these things are a lot less relevant. But what happens if FSD is not around the corner? The high risk, high reward decision to limit new factories, new vehicle development, and go all in on FSD has so far been a failure, and that's where we are today. Buying or holding Tesla stock today is much riskier than buying in 2019, says James, from my perspective, unless the stock price corrects down hard, like sub $100. I hope this doesn't happen, but that's probably where I would feel better about buying and holding. Right now, I keep following the company closely, and I am always ready to go all in if I see a catalyst or if I see proof that FSD will bear fruit. Not financial advice, do your own due diligence, says James. James didn't answer what his Tesla stock position is right now exactly, but it was 100% earlier. I'm not sure until when exactly. Now, I became a Tesla stock investor in early 2019. James became a Tesla stock investor in late 2019, so he may not remember this at all. And I remember this extremely vividly. In early 2019, mid 2019, there was a moment of time then everyone was so freaked out about Tesla stock. There was this note from Morgan Stanley which said that the stock could go down to $10 per share. Keep in mind, Tesla stock split multiple times. At that time, Tesla stock was trading at $250 $5 per share. I don't even see Gordon Johnson saying that Tesla stock is going down to $10 per share. Even his Tesla stock price target is higher than that. I think saying that holding Tesla stock today is more risky than holding it in 2019. I have to strongly disagree with that. I think you can say that without having full context of Tesla's history. If you're just looking at the last few years, maybe you can make the argument, but no, I strongly disagree. Just because you can make that argument doesn't mean it's right. I think all men experienced this feeling of a woman saying that, oh, you did something is wrong, there's something going on, while in reality, there's nothing going on. Just because she makes an argument that something is going on doesn't mean it's an actual fact. Anyway, here's what Morgan Stanley is saying now. This year's sharp deceleration in demand has led to substantial curtailment of the company's ability to generate free cash flow. By the way, this is from 2019. It almost sounds like they just wrote it, right? And if you read this in 2019 and said, oh, yeah, they're right, sounds good, you missed out on a huge opportunity. Right here is roughly when that Morgan Stanley article was published, and even today the stock is still up 1000%, because you know there was an issue with demand back in 2019. Omar shared his assessment of Tesla's stock. The company will be fine, don't be a wussy, just accept that stock is pooping its pants and let the price discovery happen. The future earnings of this company are being greatly underestimated. The affordability strategy that has scared Wall Street rather than destroying the company will end up being the most important thing the company has ever done. Faster EV adoption globally equals faster ramp of earnings growth. Here's one example of how the next big Tesla stock rally could start. Kathy Wood wrote this article. The journey from the monetary shock to an innovation-led boom could involve a harder than expected deflationary landing, driving interest rates down and rewarding companies that have invested aggressively in AI.
I don't know if that's like
new behavior. It's cool.
We have pedestrians here. We got a pedestrian right away. Good to see this. Let's see how quickly it clears this. It started creeping when he's, oh my God, that's okay. So that is such good behavior. The second it predicted that there's going to be a pathway for the car, it started going through the pedestrian gap. That is so natural.
That was so good. And not only was it good, it was also extremely smooth. There was no jerkiness, just like you would normally expect in FSD 11. The entire thing is just butter smooth. Kia bumps 2024 EV9 discounts up to $7,000. Waymo launches driverless service in Austin for employees. And if you need a break from watching Tesla Bears and Bulls fight, you can watch the Jake Paul versus Mike Tyson fight this summer. This is going to be interesting. Rivian is dropping a shift at its normal EV plan due to efficiency upgrades, and as I'm recording, Rivian has not revealed their new vehicle but is about to, so that news is going to come out very soon. And by the time you're watching this, it's probably out already. Audi is officially going to unveil Q6 e-tron this month, promising to overtake your expectations. In the next few hours, I'm going to publish an exclusive video on Patreon. Like and subscribe if you haven't yet, and I will see you in tomorrow's episode. Thank you so much for watching.